If you bought Nvidia stock before June 7th, expecting a big pop on the split, congratulations. I'm Jason Hall. This is Investing Unscripted. And on this video, I'm going to debunk two of the most common misconceptions around the Nvidia stock split that could be a mistake if you bought for these reasons. However, I've also got a reason to hold and continue to possibly make a lot of money going forward, even though Nvidia has already made itself one of the most valuable companies on the planet. Before we get into the details, though, just a reminder, this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, sure, Nvidia's done incredible, but it's not the only great stock to buy. I want you to go check out our special link. Go to fool.com/unscripted. Follow that link where you can get access to The Motley Fool's 10 best stocks to buy right now, and every month get some of the freshest, most innovative stock ideas you can find. Check out that link. Again, it's fool.com/unscripted. Okay, we all know that Nvidia has been a massive, massive winner over the past few years. Over the past decade, it's been maybe the best stock that you could have bought on the US stock market. Over the past 2 decades, it has created enormous wealth for anybody that's held for those long periods of time. I just want to talk about the short term for a minute here. So again, go back to the end of May, basically a week. This is just a week before the Nvidia stock split. Guess what? You're up 20%. That's as of today, June 20th. Now, if you bought the day of the split, you're still doing pretty well. It was up more than 10%, giving up a little bit of gains, still almost 9.5%. So right on the cusp of a double-digit gain for that short period of time. Not too bad, all right? But trading's hard. Unless you're a professional stock trader with a plan and a time frame and a lot of research that you do to come to the stocks that you're going to trade. It's a really hard thing to do if you're just a regular retail investor and you have a full-time job and a family and all the other things to do. And investing is just something that you do as a side gig to try to create additional wealth. Trading is really, really hard way to be successful. Okay, let's talk about those misconceptions and exactly what happened with Nvidia stock. So the first misconception is exactly what happened and what Nvidia stock is today. So the company did a 10-for-1 stock split effective June 7th. So what is a 10-for-1 stock split? The big thing most people see is they saw a stock that traded for about $1,200 a share. NVDA now trade for like $120 a share. NVDA, same thing, right? Was $1,200, now it's $120. So the big misconception is, man, this stock is a lot cheaper. One of the videos that we did, I even had somebody go so far as to claim that Nvidia stock was going to drop from a price to earnings multiple of in the 70s to like 7 after the stock split happened. Of course, that's not true. Kind of like the person making that claimed to be a CFO at a company. Probably also not true. All right. Here's the thing. The cost for a single share of Nvidia did fall 90% when the stock split. But I'm not going to use the pizza analogy. Got a lot of comments about that. I'm also not going to use the bucket of chicken analogy because my podcast partner, Jeff Santoro, thinks that one's dumb. I'm going to use the 6-pack of soda analogy. So saying that Nvidia is cheaper now is like saying that a single 12-ounce can of soda is cheaper than a case of soda. A 6-pack or a 12-pack, we'll go with a 12-pack. Keep the numbers kind of similar, right? Yeah, a 12-pack of soda costs more than a single can of soda, a lot more. But guess what? You get 12 times as much soda. With Nvidia, the math's a little bit different. That one share today is 10% as much Nvidia as it was a week ago, back before June 7th. In other words, you own 1/10 as much Nvidia with the stock. So the valuation itself is still going to be a multiple of the stock price times the total shares outstanding, and then divide earnings into that. So the PE ratio didn't change because the stock got split. It got changed by the percentage of price that the stock moves up and down. So the stock might be cheaper, but you're getting a lot less Nvidia for every single share that you buy. Now, a lot of you are probably rolling your eyes because you know that. You'd be stunned how many people have no idea that's how stock splits work. Yes, I will acknowledge that there still can be some benefits to a stock split, helping drive the price higher, because a stock that's $1,200 a share might feel really inaccessible. Even though you can use through almost every broker, you could just say, I want to buy $120 of that $1,200 stock, and your broker will assign you a fractional share. Still, it helps to be able to buy whole shares. It just feels better. Plus, there is some potential upside for things like the options market. When the stock price is this much cheaper, it's really hard to buy a 100-share lot of a $1,200 stock for options. The premiums get really high because it's based on a $1,200 stock times 100 shares. $120 stock times 100 shares, probably going to see an increase in volume of options for Nvidia. And that can be good for the stock price too, again, as long as the business continues to do well. All right, so big misconception right there. What's the next big misconception? And in a lot of ways, I think this is the most important one. There's a lot of people that think the stock price has come down a lot because of the split. It's just going to keep going up. It's just going to keep going up. And well, guess what? For the most part, since the stock split was announced, that's been absolutely correct. The stock has continued to move up. And if you look at NVIDIA's long-term chart, it's easy to think, you know what? For the most part, NVIDIA's stock has mostly just gone up too. Oh, look, right here during the pandemic, it fell like every stock did. But the reality is there's times that NVIDIA stock has fallen a whole lot. I'm going to do something with the chart here. I'm just going to flip this over and I'm going to show percent off of high. Wow. Paints a different picture, doesn't it? So what exactly does this mean? This shows every time NVIDIA stock fell, how much it fell from its previous all-time high. So I'm going to break down these periods of time here. I'm going to put the recessions marker on here just to help explain what we're looking at. So number one here, this is the dot-com crash. Small recession after this, 9/11 happened, the dot-com bust happened, and we see NVIDIA stock fell by more than half. 1, 2, 3, 4 different times between 2000 and the beginning of the global financial crisis. And one of those periods, from like 2002 through 2006 or so, it took 4 years just to return to that previous all-time high. I'll raise you here. It's high right before the global financial crisis. How long did it take it to fully recover from that high? That's right. It took until 2016. It took the better part of a decade for NVIDIA stock to fully recover. And of course, there's a lot of talk right now saying, well, this is AI. It's different. This is the future. This is the leading company. It's why it's one of the most valuable companies in the world. All those things are true. But a lot of this period right here, there was a ton of talk about autonomous vehicles, EVs, all of the other opportunities that they were building their CUDA platform for developers to start using their GPUs for other stuff. That's what this big run-up was. Of course, we had the pandemic sell-off, the pop, kind of the dot-com 2.0, we could almost call it, when so many of these SaaS stocks and other software companies saw their stocks come down a ton. All of that to say this. If you bought NVIDIA shares with this idea that the stock's only going to continue to go higher from here, that is a massive, massive misconception. Now, does that mean you made a mistake? If you bought under either of those two false pretenses, yes, that was a mistake. That puts you in a perfect position to get completely caught off guard when we do see the next leg down. Eventually, just like every other stock, NVIDIA stock is going to fall. Now, I want to explain to you what you could do to continue to be able to profit from owning NVIDIA shares. Now, I'm going to preface it with this. The thing that's most important is something that none of us know and none of us have full control over. And that is what's going to happen with AI investment going forward. But as a starting point, I'm going to lay some background here. So if we look at the company's results last quarter, first quarter, $26 billion in revenue, that was up 18% from the prior quarter. So just the 3 months before, and up almost 4x, 262%. That's a triple plus another 62% in revenue growth. So what's happening? We know demand for its GPUs for AI is absolutely exploding. It's absolutely exploding. Now, there are expectations, and this is the thing that's so important to understand. There's expectations out there that we could continue to see that group. So Del Oro Group, they do a lot of investment research. They're calling for data center CapEx by 2027 to be $500 billion, mainly because of AI infrastructure investments. Now, grain of salt, that $500 billion you're calling for, that's not just GPUs. That's all the other hardware. That's the infrastructure, manufacturing costs to build out more data center capacity. But a lot of that it would be GPUs, right? So that's the key here, is that they're putting those numbers out. Lisa Su, that's AMD's CEO, said that they expect to see, again, this is just GPU demand. So this is just the chips that AMD manufactures. And of course, NVIDIA is the leader by far in. They're calling $300 or $400 billion just for GPU demand for AI in 2027. So just 3 years from now, making that call. So massive expansion in the market for these chips. So that's how you can continue to make money with Nvidia, is if demand for building out this infrastructure, the growth of this infrastructure continues to play out in the next 3, 5, 10 years. That's where investors are going to profit, because this is the company that is at the forefront, not just with the hardware, but also with their CUDA platform and the software and the ecosystem that a lot of developers are using to build their technology. It's so critically important to the success of so many companies. Now, here's the thing that none of us have control over around those big numbers, those giant, many hundreds of billions of dollars of numbers. And that is, on the other end of these investments, the companies have to make money. They need to be developing AI products, mostly generative AI right now, that they can incorporate into the software they're selling, or that they can provide as tools to their customers. They can help their customers be more efficient, help their customers drive out costs, help their customers sell more of their widgets. Whatever goals the companies that are using these products are doing, the AI has to deliver on the other end. If it delivers and the return on the investments these companies are making starts to prove out, then we're going to see strong demand for GPUs and software services and other things that NVIDIA provides continue to be very strong, and potentially even continue to keep growing to numbers maybe our mind can't even wrap around. But the risk is if those customers on the other end aren't getting a benefit from it, if they're not seeing a return, the investments are going to basically dry up. So that's the risk. We've seen those big drawdowns in the past when the stock's given back 20, 30, 50, 80% of its value. There's a possibility that that still happens, particularly if generative AI doesn't quickly pay off for the companies that are spending all these tens of billions and hundreds of billions of dollars. If it doesn't pay off and they pull back quickly on their spending, that's going to be a rug pull for NVIDIA stock, and it could fall a ton. You have to be prepared for that reality if you're owning shares, and you have to think about this as a multi-year investment. If at some point you're risking capital that you can't afford to risk and you can't afford to lose it, especially if it's a short-term investment, then you may really want to rethink what you're doing. If you're thinking long-term, you're being reasonable about how much capital you're deploying. That's an individual question you got to answer for yourself. Make sure the math is safe for yourself, your family. Thinking about the opportunity, there's still opportunity there, but think about those preconceptions we talked about that you might be getting wrong. Make sure you're not backing yourself into a corner, and think about the real opportunity and the risks. And then that's where you can really make money with NVIDIA, and also potentially avoid losses if you're risking money that you really shouldn't be risking in the stock just because you think it's going to go up.